Hey, it's Clay Trader, and this will be a video chart on ticker symbol MACK. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. I don't mean to rub the salt in anyone's wounds or anything like that, but today was just a terrible day. I mean, from where it started to where it is right now, just essentially a pump and dump, a miniature pump and dump. I don't know anything about the company, so I'm not commenting on the company itself. I am strictly commenting on the price action itself. And a pump and dump, at least for me, in my definition, is a price that makes a great move, and then in a quick amount of time, the price is right back to where it started, or in some cases even lower. So I mean, when you apply that, the price started right here from where it closed, and it gapped all the way up there. So I don't know about you, but I would consider this a very, very nice move. And then the second part of the definition is, well, within a relatively quick amount of time, the price is right back to where it started or even lower. And I would consider this a pretty quick amount of time. I mean, in the same day, the price went down there and closed right there. So essentially right back to where it all started. So from a price action perspective, if you were to say, Clay, look, just summarize this for me quickly. Price action, total pump and dump today. Maybe you've heard the term gap and trap and you're not quite sure what is a gap and trap. Well, look no further. Here's a great real life example. Price closed here, gapped all the way up there, open there, and then from there, I mean, just down she went. So not a good day, and I realize I'm stating the obvious when I say that, but as far as levels of support going into tomorrow, you can keep an eye on that point right there. Could see a bounce off of 358 area. If it doesn't bounce off of 358, the next level of support to keep an eye on down there at that level, which sits at 345. In the event the price falls down through 345, then at that point, that's just full-blown bears taking back over, because that would be putting the price at new lows, and new lows is not something that bulls do, right? New lows is got the bears claw prints written all over it. On any sort of bounce, key level that the price is going to need to get back up above first is going to be that purple line there, which is the 50-period simple moving average. But at this point in time, at least in my opinion, top priorities are not breaking levels of resistance. The top priority needs to be just stabilizing the price and trying to get some sort of sideways price action. So still 4 days left this week, so we'll see what the bulls have in store, if anything. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interest in and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.